The Path to Financial Freedom. Master Money, Saving, Investing, and Business. Lecture 14. Warren Buffett's Strategy for Picking Winning Investments. Module 4. Investing like the Wealthy. What makes Warren Buffett one of the greatest investors of all time? It's not luck, and it's not about chasing trends. He built his fortune by sticking to simple principles that work in any market. It's about using a smart, patient, and disciplined strategy that focuses on long-term value. In this section, we'll break down Buffett's timeless approach so you can start thinking like a true investor, not a gambler. Buffett's philosophy is simple but powerful. Only invest in what you understand, and only invest in businesses you believe will stand the test of time. He looks for companies with strong fundamentals, predictable earnings, and a product or service that people need and will continue to need. Instead of chasing trends, he focuses on value and long-term stability. One of his most famous quotes is, "Be fearful when others are greedy, and greedy when others are fearful." This means he buys when prices drop and others panic, and avoids hyped-up investments that seem too good to be true. When Buffett chooses a stock, he's not just buying a symbol on a screen, he's buying a piece of a business. He looks for what he calls a moat, a long-lasting competitive advantage that protects the company from rivals. He also looks at value. Is the company's stock undervalued compared to what it's truly worth? If yes, that's an opportunity. Another key element: management. Buffett wants to invest in companies led by smart, honest, and efficient teams. And finally, he's never in it for short-term wins. Buffett chooses companies he's willing to hold for decades. Did you know that Warren Buffett bought shares of Coca-Cola in 1988, right after the stock market crash, and still holds them today? At the time, most investors were panicking after the 1987 crash. But Buffett saw Coca-Cola as a solid company with a strong brand, global demand, and long-term growth potential. He invested $1 billion in Coca-Cola, one of his largest investments ever at that time. Today, that investment is worth over $20 billion, and he still earns hundreds of millions in dividends every single year. This is a perfect example of his philosophy. Buy what you understand. Invest in companies with a strong moat. Be patient and think long-term, even when others are afraid. Warren Buffett didn't get rich by trading fast. He got rich by being calm, wise, and consistent. You can do the same on your own level, starting today. Buffett's strategy is rooted in patience. He believes in holding investments long enough to let compounding work its magic. He avoids buying trendy stocks or trying to time the market. One of his golden rules is, never invest in a business you cannot understand. If something's too complex, it's not worth the risk. Buffett also sees market downturns as opportunities. While others panic and sell, he looks for great companies on discount. This slow and steady mindset is what has made him a billionaire, and it can work for you too. You don't need millions to invest like Warren Buffett. What you need is the right mindset. Start by learning how to value a company, understand its earnings, debts, and growth potential. Think like a business owner. Don't focus on the stock price today, but on the company's future. Ignore market noise. Stay calm and focused even when others are panicking. And most importantly, always do your research. A well-informed investor is a powerful one.
If you enjoyed this video, show some support by hitting like, tapping the bell, and subscribing so you never miss our latest content on financial freedom and wealth growth. Let's grow together. Your one click makes a big impact and helps us create even more for you.